This is a New Jersey Network News Minute with Mary Cummings.
Two legislative leaders say there will probably be a need for state worker layoffs in light of the current fiscal crunch. Senators Lawrence Weiss and Richard Zimmer say cuts should come from the top to save the most money. State Supreme Court Justice Robert Clifford has been publicly reprimanded by the Advisory Committee on Judicial Conduct. Clifford pleaded guilty last October to drunk driving and refusing to submit to a breathalyzer test. Rutgers University is standing by a study which found that 20% of the milk sampled in 10 states contained traces of veterinary antibiotics. The federal government says it's conducted similar testing and has found no such residue. The Coast Guard and the EPA are being asked to investigate the source of wood and other debris washing up on a 30-mile stretch of beach in Ocean County. Residents suspect the charred wood came from offshore barges used to incinerate harbor debris. The weather, clear tonight, sunny and spring-like tomorrow. Join us weeknights at 7 and 11:30.
This is New Jersey Network.
WNJS, Channel 23 Camden, Atlantic City, and Philadelphia. Viewer-supported public television.
In our report, the West German mark moves a step closer to becoming the East German currency.
Political risk in Eastern Europe leads U.S. investors to look for insurance.
And the bulls ensure a big gain on Wall Street, taking the Dow up 33 points.
The Nightly Business Report, made possible by Digital Equipment Corporation, providing customers with the computing resources to facilitate easy, efficient teamwork across the entire enterprise. A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 380 locations. A.G. Edwards, investment since 1887. And by the financial support of viewers like you. The Nightly Business Report is produced in association with Reuters, the world's largest electronic publisher.
Good evening. In a move that could hasten the reunification of the two Germanys, the West German government today agreed to begin immediate negotiations with East Germany on a monetary union. West German Finance Minister Theo Weigel told a news conference that the move, which would make the West German mark the official currency of both Germanys, would essentially mean that East Germany would have to give up its monetary sovereignty. And despite some protests against the proposal by demonstrators in West Berlin, Economics Minister Helmut Hausen said that the move would benefit both countries.
The reaction of European markets to the proposed German monetary union was decidedly negative, as investors worried that the move would heat up inflation. West German government bonds were especially hard hit, and stocks on the Frankfurt Stock Exchange also closed broadly lower, with the DAX index losing almost 38 points. However, the West German mark held steady on currency markets despite fears that the rescue of the East German economy could dilute its value. Paul?
Displaying all the symptoms of an acute case of the Treasury refunding jitters, the stock market opened sharply lower this morning on fears that there would be disappointing demand for today's 10-year note offering, not to mention tomorrow's 30-year bond auction. In the wake of yesterday's 16-point closing deficit in the Dow Industrial Average, the market fell another 20 1/4 points by 10 a.m. as losing stocks took a commanding 7-3 lead over gainers. Thanks in part to just moderate volume on the early sell-off and a slight comeback in bond prices, stocks stabilized during late morning and then began to make a nice comeback when the market finally was blessed with some quality leadership for the first time this year. And it came from the high-tech group, with IBM and Digital Equipment spearheading the rally after getting some positive comments from several brokerage analysts. By 2 p.m., the industrial average, believe it or not, jumped to over a 30.5-point gain at the 26.37 level, while advancing issues took an 8-5 lead over losers. This abrupt turnaround triggered plenty of short covering purchases and program buying over the next hour, especially after indications were that the 10-year note auction was going well. At 3 p.m., the Dow was up 31 3/4 points. The upward momentum extended into the final hour on increasing volume, and the Dow Jones Industrial Average closed near its best level of the session with a gain of 33.78 at 2640.09. Theoretical high of the day, not too far from that, 2651.35, and the low down around 2579, just about a 71-point range. Trading volume today moved up smartly to 187.4 million shares, and up volume absolutely swamped down volume by about 3 to 1. The Dow Transport Index doing well, up nearly 11 3/4 points. Utilities up 0.88. The Dow 65 gained just over 10.5 points, and the closing tick a still rather bullish, plus 404. Standard & Poor's 500 gained just over 4 points, over a 5 1/4 point rise in the 400. The 100 up just about 5 points, and the Commodity Research Bureau March Index was up 1.35. The New York Stock Exchange Index up just about 2 points. Value line up 1.63, and the Wilshire 5000 had a good gain of nearly 31 2/3 points. Selling pressure was on bond prices early today, with longer-term issues down as much as a half point because of the uncertainty over whether there would be decent buying demand for today's auction of 10-year Treasury notes. As it became clear that the issue would be fairly well received, prices rallied nicely, even though the 10-year note was priced to yield a slightly higher than expected 8.59%. Probably the more positive factor was the belief that tomorrow's $10 billion offering of 30-year bonds would get a better than expected reception. Also helping was an easing in the Fed funds rate below 8%, but it is Weird Wednesday. In any case, tax-frees closed with quarter-point gains, corporates rose about 1/8, and longer-term governments closed up 3/8 of a point, like the 30 years up 13/32. The Shearson-Lehman Long Treasury Bond Index gained 4.68, and Fed funds, as you see, closed at 7 7/8%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets, gold and platinum closed lower in reaction to the late rally on Wall Street. Silver, however, held steady. The dollar closed higher on short covering despite bearish sentiment toward the currency. The pound lost 3/4 cent against the greenback. And oil prices fell in New York and London on an industry report yesterday that showed a buildup of U.S. gasoline, heating oil, and crude supplies. The nation's chief trade negotiator, Carla Hills, today said that she's prepared to have the U.S. walk away from GATT trade talks, now underway in Geneva, rather than reach an agreement that isn't in America's best interests. But speaking before the Senate Finance Committee, Hills said that those talks are making progress on several key areas. And afterwards, she told the Nightly Business Report that she only sees a U.S. walkout as a last resort.
We need fundamental reform in agriculture. We need rules in the areas of services, investment, and intellectual property. We want an end to subsidies. We want a good dispute mechanism, and we want market access. And if I don't get those things and we're just tinkering at the margins, then it would be, I know I wouldn't have to bring it home that I could not get congressional support.
And speaking today in San Francisco, President Bush reaffirmed his commitment to reaching an agreement in the Uruguay round of the GATT talks, saying that it's important to enhance free trade. Linda?
One matter that's having an impact on the U.S. position in international trade is the rising cost of health care in this country. And Washington correspondent Dennis Moore reports that business and labor leaders today called on Congress to deal with that issue.
When a car rolls off the assembly line in this country, it contains at least $500 of health care, the cost of company-paid benefits to workers. But health care costs automakers only about $350 a car in Europe and just $225 a car just across the border in Canada. Well, no surprise, Canadian-style national health insurance, once a capitalist heresy here, now gets the endorsement of Lee Iacocca at Chrysler and Donald Peterson of Ford. Well, not many business executives go that far, but even the National Association of Manufacturers is pleading with Congress to do something.
We simply can't stand the current rate of escalation. We have to begin to deal with the problem.
Lower Japanese healthcare costs are hardly the only reason American industry has competitive problems. But the U.S. does spend more on healthcare than any other industrial country, with debatable benefits. And Congress is getting the message.
It is the social problem of the decade, and it'll be down in the streets before long.
The Pittston miners' strike last year was the most passionate and violent, but far from the only labor dispute in which company attempts to cut healthcare benefits were the major issue.
We know what it does to their bottom line. But we are not going to find a way out of this mess by dumping it on the backs of workers.
And for all the talk of free market health care in this country, economists say it's a myth. There's no competitive pressure on costs when the person who buys isn't the one who pays.
It's just economic nonsense to say when people pay the first $100 or $500 of the cost of health care that it won't influence what they do.
But the more employers cut benefits, the more doctors and hospitals pass the cost of charity care on to people and companies with insurance. And unless that cycle is broken, the spiral of health care costs won't be broken either. In Washington, Dennis Moore for the Nightly Business Report.
Ford Motor said today that it's firing up to 2,400 workers at a Mexican assembly plant after a month-long walkout that stemmed from an internal union dispute. Ford says 1,400 workers have returned to work at the plant outside Mexico City, but the remaining 2,400 still taking part in the walkout have been notified that they are being cut from the payroll. The walkout began last month with a worker demand for a Christmas bonus and changes in the union leadership, which dissidents at the plant say is corrupt.
Mexico just became the first country to complete a debt reduction agreement with its lenders under the Brady Plan. And Treasury Undersecretary David Mulford today cited the accord as proof that the plan is a realistic way to deal with third world debt. Testifying before the House Finance Subcommittee, Mulford said the Brady Plan's most important contribution may be to restore confidence in the debtor country's economy. And he said the possibility of re-attracting private investment offers debtor nations a far more credible solution than perpetual dependence on new loans from unwilling banks.
While the current events in Eastern Europe offer a window of opportunity for U.S. companies to enter that region, there is still some concern about the political stability of many of those nations. The U.S. agency that insures American companies investing overseas against political risk is OPIC, the Overseas Private Insurance Corporation. I talked with OPIC President and CEO Fred Zeter about the risk of doing business in Eastern Europe. I asked him if there's a lot of interest among U.S. firms to invest there and whether OPIC insurance is available.
I led a mission to Eastern Europe, to Poland, and I've got one coming up in April and May again to Poland and Hungary. Tremendous amount of interest, and OPIC does provide insurance as well as capital for a business to get started. Just since we've been operating the last few months in Poland and Hungary, we have taken orders for over $500 million of insurance, and we have another $500 million on the books ready to go.
Do American companies receive any special incentives for investing in areas such as Eastern Europe?
Well, the best thing that they get, Jim, is an opportunity to get a good return on their investment. We've found tremendous amount of enthusiasm and interest by U.S. companies to move into Eastern Europe as it opens up, not only into Poland and Hungary, but in the other areas there that are turning away from a controlled economy and towards democracy, free enterprise, and privatization. There are all sorts of opportunities for people that get there first on the ground floor.
You said recently that Panama's economy is in worse shape than anyone first suspected, and it'll take longer to rebuild that economy. Why did you say that?
Because I think that's the truth. In taking a close look at it, and I just got back a few minutes ago. I just got off the airplane before I came into the studio here from a trip, an exploratory trip to Panama, and it reinforced my two things. One, that it's going to take longer than some people think. It always does. Secondly, that the opportunities for it to really work are much higher and better than I had any idea they would be. There are really good opportunities down there. There are businessmen that have been, suppressed for so long under Noriega that are coming forward now and are very anxious to do business, and they had a good economy before. So I think it'll come back. But some people expect things to happen too quickly. It's going to happen, but it's going to take, say, a little longer. What is a little longer? Some people think it's going to happen tomorrow. I think in 6 months, it's going to be in great shape.
And Zeter says that he plans to lead an investment mission to Panama in about 2 weeks to let U.S. investors get acquainted with the economic and political climate in that country. Paul?
The climate on Wall Street late in the day was warm for the bulls. Let's have a look at that closing Dow. A really nice turnaround from a 20-point early loss to a closing gain of over 33 3/4 points. About 9 stocks closed higher for every 5 lower, and yet 32 new highs for the year versus 71 new lows. Topping the active list on 4.5 million shares, T. Boone Pickens Mesa Limited Partnership up an eighth. Verity Corp rose a quarter, and IBM. Now you see all the Dow 30 stocks from here on in will be in blue for blue chip. And, of course, IBM is in the Dow 30, up 2 1/8 today. Good leadership. Hibernia, the big Louisiana-based bank holding company, down 1/8. Bank of New England was off 7/8 of a point. Halliburton rose 3 points. Company had a sharp earnings gain in the fourth quarter, 45 cents versus 11 cents. Baxter International rose 3/4. And then we see more blue chip Dow 30 stocks. American Telephone up 3/8. Philip Morris up 3/4. And GE, of course, which is a Dow stock, up 5/8 of a point. AMR moved up a point in a strong airline group. Anheuser-Busch rose a point. Even though its fourth quarter earnings were up only 2% from last year, it gained 1 full percentage point in its market share of the U.S. beer market, and that helped the stock. Then we see some good, strong, very good, strong high-tech stocks. Compaq Computer up 4 5/8, Digital Equipment rising 1 7/8, and then some more Dow 30 stocks. DuPont up 1 1/8, and General Motors, of course, up 1 1/2. And USF&G rose 1 1/8 points. The company came in with better than expected fourth quarter earnings. Accuson Corporation, which is involved in ultrasound imaging, up 1 7/8. The company had a big gain in fourth quarter earnings, up 26%. Scientific Atlanta doing well, up 1 1/8. Its second quarter fiscal quarter earnings were up 24%. Also, Scientific Atlanta says it's going to buy back up to 3 million of its own shares. Fieldcrest Cannon did well, rising 1 1/8. The company had a big increase in its fourth quarter earnings, up 60%. Solomon Incorporated gained 1 1/8. The company said it's going to buy back up to 8 million of its own shares. Norton Company, one of the big losers of the day, off 4 3/8. Its fourth quarter earnings were down 33% from last year, worse than Wall Street expected. And Portland General off 7/8. It reported a $1.50 loss in its fourth quarter versus earnings last year, and it will cut its quarterly dividend from 49 cents down to 30 cents. That was worse than Wall Street expected. Over the American Exchange, a gain of 1.61 in the market value index. Trading volume down 600,000 shares from yesterday's pace, about 3 stocks up for every 2 down. Hillhaven once again topped the active list on the curve, 570,000 shares. No change in the stock. Bolar Pharmaceuticals halted up 1 point at 13 1/8, pending a press release. We don't know whether it'll be positive or negative. It's not out yet. Solomon Warrants, those are the, in essence, the puts against the Nikkei index, down 1/4. Omdal up 3/8, and Janbel Marketing gained 3/8. Sykes Corporation rose 1 5/8. A French firm, which is also in the ceramics business, which already owns 5% of Sykes, said it may bid for control, didn't name a price. Larissa Industries off 1 3/8. The company has failed to reach any pact with a third party on any buyout or restructuring agreement. NASDAQ trading a gain of 2.80 in the composite index. Nice percentage move there, and trading volume up an impressive 30 million shares from yesterday's pace. 1,082 issues closed higher, 829 lower. The 100 index gained nearly 3.5 points. Sun Microsystems in that strong high-tech group moved up 1 1/8, or 1 1/2, I should say. Apple Computer was down 1 1/2 on news that the fellow that's in charge of its new product development may resign soon. Intel gained 1/4. Microsoft off 3/4. Seagate Technologies up 1 point. MCI Communications edged up 1/8. Oracle Systems doing well with a 1.5 point gain. Connor Peripherals gained 1 1/4. Reuters Holdings up 5/8 within 1 point of the all-time high. Lynn Broadcasting gained 1 1/4. Brand companies moving up 1 1/2. Big fourth quarter earnings, 38 cents up from 21 cents last year. Calgon Carbon was up 3 1/8 points. The company had fourth quarter earnings of 48 cents, nicely up from 39 cents last year. And finally, Baldwin Piano and Organ struck a rather dissonant note for shareholders, down 1 1/4 points. The company says its sales in the fourth quarter will be below its projections. That's our Wall Street wrap-up, Linda.
Thanks, Paul. A nationwide survey of home resales in last year's final quarter has found prices generally higher than sales in the same quarter of 1988. The National Association of Realtors reports that the biggest gains continued to be registered on the West Coast, with home resales in the most expensive market, Honolulu, jumping by 25%. Even in the depressed Houston market, prices were reported to be up better than 10%. But in the Northeast, the median home price was up less than 1%, with prices in the metro New York area virtually flat. The chief economist for the Realtors, John Tusillo, says while there were major price variations, the overall picture was of greater than expected strength.
What we are looking at is a housing market which is settling into a tenable pattern of growth, much the way the economy is. Now, I hate to use the term soft landing for housing, but I think we've got a soft landing for housing. And while we may not be enjoying the rip-roaring rates of appreciation we've seen in some markets in the mid-'80s, we are seeing, by historical standards, market strength in more areas now than we had earlier in the 80s.
Tusillo added that home sales would be even stronger except for the fact that interest rates are too high. He says that's because the bond market is overestimating inflation and the strength of the U.S. economy.
While much of U.S. construction is devoted to housing, analysts say there is an increasing need for the rebuilding of the U.S. infrastructure. As New York correspondent Scott Gervey reports, many roads and other public projects are at the breaking point.
The water from the broken main pours into the subway tunnel, and hundreds of thousands of New Yorkers find their regular route to work blocked for more than a week. In New York, this happens so often it is taken to be a regular part of the traffic report. New York is falling apart, but the problem is seen across the nation.
The roads have got potholes, the bridges are falling down, the mass transit systems in the big cities are a mess. We have got air traffic, airport problems all over the country. We could easily spend $10 or $20 billion a year more on our infrastructure for the next decade.
The costs of failed infrastructure are sometimes measured in human lives, but more often they are measured in terms of indirect business expenses, like increased costs for shipping goods around damaged roads. Money spent for infrastructure as a percent of GNP has been falling for years, but few government agencies have seen fit to reverse the trend.
Every year, it's easier to have elected officials put money in for policemen, for firemen, for teachers, for sanitation workers. Very difficult to argue about paint scrapers or painters or mechanics to fix broken pipes. And that's really what it's all about. It's the priorities and the level of investment that municipalities and states and cities have to put into their infrastructure to keep them going.
Some experts believe the need to raise funds for infrastructure repair could revive a municipal bond market still reeling from tax law changes 4 years ago. Urbanologists say the public is growing impatient at the slow rate of progress and disturbed by evidence of continuing decay.
When it gets down to it, it always has to do with a lack of trust, that there's a growing lack of trust in both the public and private sector's ability to deal with those management questions.
The problem with the infrastructure crisis is that it's not sexy. Politicians would rather cut the ribbon in front of a new facility than allocate funds to repair an old one that's falling apart. In New York, Scott Gervey for the Nightly Business Report.
Coming up, Adam Smith looks at the Moynihan plan to cut Social Security payroll taxes.
Argentina's currency, the Austral, tumbled against the dollar today, falling below 3,000 Australs per dollar. The currency has lost a third of its value this week as investors rushed into greenbacks as a hedge against Argentina's rocketing inflation, now running at 60 to 80% per month. Hyperinflation is also plaguing neighboring Brazil, and today the monthly interest rate at banks in that nation topped 100% for the first time.
As Paul mentioned earlier, the head of the new product development at Apple Computer is expected to be the next top executive to leave the company. Reuters quotes sources at Apple as saying that the executive, Jean-Louis Gasset, will probably be gone by the end of the month. Gasset was instrumental in successfully rejuvenating Apple's important Macintosh line in 1987, and analysts say his departure would further erode morale at Apple. The company had no comment.
The U.S. Justice Department today said it will not challenge the merger of Delta Airlines' Datus II computer reservation system with the PAR system, jointly owned by Transworld and Northwest Airlines. Analysts say Datus II and PARS are the weak sisters of the airline booking systems, so the merger should increase competition. Reuters reports that the three carriers will announce the merger of the reservation systems tomorrow in New York.
In tonight's commentary, Adam Smith, author and host of Adam Smith's Money World, says the Moynihan plan to cut Social Security taxes would force action on the real federal deficit.
Senator Daniel Patrick Moynihan is a man of wit, charm, and Irish mischief. Of the Reagan years, he said, "We borrowed $1 trillion from the Japanese and threw a party." And as you know, Senator Moynihan has proposed cutting $55 billion from Social Security taxes, and he is not by nature and by party a tax cutter, so what goes on here? A sudden blinding conversion to the art laugher supply side? Hardly. Senator Moynihan was part of the Social Security Commission that saved Social Security from going broke, and he doesn't like the use to which Social Security is now being put. Most Americans think those deductions from their paycheck go clinking into some federal piggy bank for their later years. Wrong. Reach inside the piggy bank, you'll find a note from Uncle Sam that says, I owe you. The money's already gone to pay the Navy, the Post Office, and the savings and loan bailout. Moynihan has done a real service here because perhaps this will get us to look at the real deficit, which of course is $100 billion higher if you don't count the Social Security surplus. There are sound suggestions for Social Security. Run it like a real pension fund with individual accounts, have Social Security run by a separate agency and really invest the proceeds. That could produce a sudden burst in the savings rate and make the U.S. a fantastic global competitor. But at least stop masking the budget deficit. There is a danger here. Senator Moynihan wants to end the mindless read my lips tax talk and to show that this tax hits the poor the hardest. But what if Congress gets in a supply-side cutting mood, it has before, and then cuts this and does nothing else? You'd have a bigger deficit, higher interest rates, a lower market, and all the rest of the ills. At least the truth would be out. With Congress, anything's a gamble. Gambling is what we did when we borrowed the $1 trillion from the Japanese. I'm Adam Smith.
Recapping tonight's top stories, the West German government offers to begin negotiations on a monetary union with East Germany.
Stock prices head north as the Dow Jones Industrial Average ends with a gain of almost 34 points at 2,640.09.
And looking ahead to tomorrow, we'll have the final results of the Treasury's big auction as the final offering of 30-year bonds is completed. But first, we're going to complete the show with Paul.
There may not be much that we can learn from Argentina on the economic side, but that nation has the right idea when it comes to taxes. It's planning to hold weekly and monthly raffles to encourage people to pay a new value-added tax. All Argentinians will have to do to be eligible for prizes is to hold on to their tax receipts. Now, of course, you don't pay the taxes, you don't get a receipt, but they didn't name what the prize is. If it's an Argentinian Australs, I don't think they're going to get a very good response.
That's it for this edition of the Nightly Business Report for Wednesday, February 7th.
Now, for Paul, Linda, and all of us on the Nightly Business Report, I'm Jim Wicks. Good night.
This program is produced in association with Reuters, the world's largest electronic publisher, which provides a nightly business report with news, market data, and communication services worldwide. And is made possible by A.G. Edwards, providing financial services through more than 380 locations. A.G. Edwards, a century-old tradition of putting the customer first. Digital Equipment Corporation, providing customers with the computing resources to facilitate easy, efficient teamwork across the entire enterprise. And by the financial support of viewers like you. For a transcript of this program, send $4 check or money order payable to the Nightly Business Report in care of News Transcripts Incorporated, P.O. Box 34100, Washington, D.C. 20043. Please specify the date of the program.
Visit Bali, a mystical island where life itself is a dance of devotion. I'm Richard Kiley. Join me for Bali, Masterpiece of the Gods, the next National Geographic special.
Don't miss it. Tomorrow night at 8.
A state mandate on AIDS education for all New Jersey students coming up next.
This is New Jersey Network.
The 11:30 report is a rebroadcast of this evening's New Jersey Network News.
Major funding for New Jersey Network News is provided by the Geraldine R. Dodge Foundation, First Fidelity Bank, and Jersey Central Power and Light.